This week we're going to focus on soybean planting progress here in the U.S. as well as short-term weather trends. Then we're going to turn our attention to the export market in the U.S., which is strengthening as we speak. Then we're going to wrap things up with a long-term review of November soybean futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved into the last week in April here, and soybean planting is taking place at a fast pace. Let's take a look at nationwide progress. We're 8% done here this week. Last year at this time was 7% done, and 5% is the 5-year average. We've highlighted there in the Western Corn Belt several states who had very fast progress latest week, particularly Iowa, looking at Minnesota off to a quick start. Even Illinois is well above the 5-year average. Let's now take a look at the history of soybean planting progress here. Again, we're looking at 8% as of April 20th. At 8%, best as we can tell based on our research, that's the fastest pace we've ever seen in soybean planting. And on average, approximately 18% of the beans are planted between April 20th and May 4th. So if weather permitted here, we may be looking at soybean planting pace approaching 25 to 30% as of early May. Of course, as we mentioned, the weather is directly related to soybean planting pace. Let's take a look at the short-term forecast. Our slides this week, as usual, are courtesy of T-storm weather. We're starting out here looking at a measure of topsoil moisture. The last 14 days moisture. You can see in the west it's been dry. That's why I've had that fast start to bean planting out there. As you move further east, it's a little bit wetter, but as you get into that far eastern corn belt, it has dried out there, which may be conducive to some active planting, weather permitting. Now let's take a look at the next 7 to 10 days. You can read in that gold box there, but there's a front moving in Wednesday through Friday. We're looking at the heaviest precip associated with that front in Iowa and out in the plains, and then another front, another system, if you will, moving through in that orange box highlighted Sunday through Tuesday. That's going to be wetter again in the western area. So again, let's quantify that now. As you look at the backdrop of this slide is soybean production in the U.S. Anything to the west, if you will, of that purple line is going to be wetter than normal here the next 10 days to 2 weeks. If we go east of that purple line, it's going to be closer to normal. Let's quantify that in a different way. Let's take a look at precip the next 14 days. Now if we take a look at the map here, you can see that as you do move west of the Mississippi there, quite a bit of that area is green or dark green, which would be very wet. Parts of Kansas, for example, southern Nebraska. But as you move further east, the southern half of Illinois, southern 2/3 of Indiana, western Ohio, we're going to be closer to normal. Hopefully that'll give some good planting conditions in that area. Let's shift gears now and look at unshipped soybean export sales. Now, soybean export sales here, looking at the absence of China, of course, compared to some of those recent years, but they're actually not too bad. And here's what we want to highlight. Is the market too bearish on 24-25 exports? The USDA forecast requires balance of the year exports of about 210 million bushels, and that's a little bit less than last year. However, these unshipped sales that we're looking at are greater than last year as of April 10th, with increases for several buyers, especially unknown. Plus, the Gulf has a $12 to $14 per metric ton advantage to the EU, and July-August FOB values seem to favor Gulf over Brazil. Let's wrap things up this week looking at trends in November bean futures. On November beans, as we tape here on Tuesday, trading near $10.25 a bushel. Notice we get into May, June, July, August, even September, potential for quite a bit of price volatility is ahead of us. That's why we strongly encourage you to continue to work closely with your trusted risk management advisor to manage price movement. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. And remember, we update every Wednesday. Make sure to subscribe to our channel and never miss an upload. Thanks a lot. Have a good week.